Hey guys, this is the first video in a series about buying a house in Japan. Japanese regulations allow foreigners to buy property in Japan without any trouble at all. So if you already have the funds from your own country, it's very simple, providing you can either speak Japanese or have someone who can help you that can speak Japanese and help you through all the paperwork and so on. If you need money, there's a few options. One of them is some of the Japanese banks do loan to foreigners. Many of them usually expect permanent residency visas or permanent residency status from people borrowing money from them. Some of them don't, but they'll be looking for same things as in our own countries. They look for permanent employment, long-term visas. Their main concern with the visas and so on is how long you're going to be here for. So if you've got permanent residency or a spouse visa or something like that that shows them that you're going to be here long-term, that definitely helps. Most of them look for about 20% deposit. Another alternative is foreign banks in Japan. There's two that I know of, Australian banks that are in Japan. One's NAB, National Australia Bank, Asia. They have a branch or they do business in Japan, but only in Kanto and Kansai. There's also the CBA, which is Commonwealth Bank of Australia. They seem pretty good too. They usually require 20% deposit or security over a property in Australia. As for other Western banks and foreign banks and other Japanese banks, we're still investigating that. The interest rate seems to be about 2% or 2.5%, so it's pretty cheap compared with other countries. So we're going to be getting more information on this as we investigate it further, and it will be posted on the website, and we're going to put a link below here in the description so that you can access that information, and we'll update it as we get more information. So there's the first video in the series. The next will be the looking for houses, and we'll update the videos and we'll update the website regularly. So here we go.